market certainly delivered more treats than tricks this month.
Right. It tricked people in September and it treated people in October. We're down 5% in September, bounced back 7% in October, one of the best months in history. And that's really been driven primarily by strong corporate fundamentals.
And that fear and greed factor that we look at a lot, too, that greed is ratcheting up even more in this last week.
Yeah, it's something that we talk about in our investment committee every week. And, last month it was in the low 20s. And I mentioned any number of times on this show, that's a time you really want to be preparing and utilizing a shopping list. But now it's up to 71. It's in the greed zone. So it would suggest people be a little bit more cautious now about plunging into equities.
Yeah, but that's even, the greed is up even with inflation rising to a 30-year high on a 4.4% year-on-year number.
Yeah, but we always have this conversation about headlines. The market's a discounting machine. People already knew that. That's why we went down 5% in September. And actually, the other side of inflation, if you do have pricing power, it actually can lead to higher earnings. So it's not necessarily all a negative.
So earnings. Let's talk about some earnings highlights.
Well, Microsoft was probably the biggest one. I mean, Microsoft is now the most valuable company on the planet. They reported a tremendous quarter. The stock is pretty expensive. It does pay a small dividend, but the fundamentals are absolutely spectacular. As opposed to Apple, they missed by about $6 billion on the revenue line, and that's primarily due to supply constraints. So that stock, despite the fact it was their first miss in over 5 years, it didn't really react too negatively because investors assume things will eventually become more normal on the supply chain side.
It kind of feels like this is a broken record in terms of Apple can't get parts at year end. I mean, I know we have a logjam in supply going on right now, but that seems to happen to Apple quite a bit.
Well, I mean, it's a complicated business. It involves a lot of moving parts. It involves, logistics. It involves getting semiconductor parts and the rest, as you mentioned. But bottom line, the company has a new upgrade cycle coming. The key is, will that iPhone 13 really be enough of an upgrade over iPhone 12 to trigger the type of demand some investors are expecting?
Which one do you currently have right now?
I just bought the 12.
You did?
Yeah, because the 13A was a little bit more expensive, and B, I'm not a big camera person, and that to me was a major difference. I mean, the camera on the 12 is fantastic.
Yeah, the camera is really amazing on those. Hey, we saw some strong earnings from the energy sector finally too, huh?
Right, oddly enough, right? Everyone hates fossil fuels. Chevron reported the highest free cash flow on record. The stock has actually done pretty well. And I mentioned last week on the show that when WTI traded $85, the price of these stocks was significantly higher than they are currently. And they also offer attractive dividend yields. Both Exxon and Chevron reported great numbers.
Well, I think there are a lot of people out there that are happy to see that finally. Let's pivot to the GDP report now.
GDP was a little sluggish, up 2% versus expectations of up 2.6, down considerably from the first and second quarter. But again, this is a supply problem, not a demand problem. If supply was able to meet demand, that number would have been significantly higher. And most economists believe the economy is going to reaccelerate in the fourth quarter.
So, and we know the fourth quarter, we're heading into this seasonality. We talk about this a lot on the shows. I've heard you and the committee mention this a lot. And seasonality can be supportive of small caps in particular. We're seeing them pick up.
Right. They've really languished even in this rally in October. But generally speaking, small caps tend to outperform large cap when the seasonality is favorable from November through the end of April. And in addition, small caps tend to do better when the yield curve is steepening. This past week, it actually was flattening. So small caps did lag. But our expectation is the yield curve will steepen as the economy reaccelerate.